saying that on Bybit you're like one of the highest ranking traders. You've been in crypto for a long time, so I know that for many of us, whether that's just investors in Drip or Animal Farm or just investors, would love to hear what your thoughts are about the current market sentiment, how that affects Animal Farm and Drip, and how ultimately you think that that's bullish for DeFi in general.
Yeah, so you're correct. Right now, I'm ranked number 2 overall on Bybit as far as trading performance, and over the past couple weeks. So if you look at my ranking overall on Bybit as far as how they track their performance, I'm number 2, and then over the past couple weeks, I've been ranked number 1 over the weekly time frame, and that is largely due to the strategies I utilize in the market, and it speaks to some of the issues in the market that we're seeing right now. So not to go deep into my trading strategy, but my trading strategy is built around institutions trading against their client order flow. And these institutions have very large positions that they need to take in order to trade against their client order flow. So they cannot get all in and all out of their position. It would move the market too much if they were to do it like a traditional market order, obviously, which they don't, or it would there's not enough liquidity on the books to enter in a large limit order. So they do it over time, and they use a specific set of algorithms to enter into these positions. And this creates a set of signatures that my system, which I've developed over the past 5 years, identifies and often identifies very early as soon as they start producing these signatures, and allows me to essentially front run the rest of their entries into the market as they trade against their client order flow. And utilizing the system has allowed me to become the number 2 overall highest performing trader on Bybit. So this tells you who are moving the markets, and why 95% of users who trade on these leverage exchanges lose their capital, and just the kind of dirtiness of the space when it comes to these centralized exchanges. Now, the overall market, just to speak, my trading system is not focused on macro anything really. I do take some macro positions, but my day-to-day trading strategy is based on shorter-term moves. However, I do have a macro outlook on the market, and that would generally be when Bitcoin has done an 80% or greater correction, because I believe in the fundamentals of the technology, and I believe that it is providing a significant utility, I'm interested in buying essentially anything under 19,000, 18,000. So I made a significant entry at 17,000 when we got down there the first time. I'm interested in DCAing in, dollar cost averaging in to the market in general, BNB, Ethereum, Bitcoin. And I'm doing this because I believe in the tech. The way I see it is potentially we could even do a 50% correction from here, which would be effectively a 90% correction in Bitcoin, and maybe the plus 90% in BNB and ETH. But because I took significant profit near the top, and I could tell you how I determined where the top would be within a few days, and I made this public. I've been talking about where I thought the next top would be for years. Since Bitcoin was at $4,000, I was talking about 60K would likely be the new top. And because I took some significant capital off the table in that time frame, I'm okay with starting to enter back in under 20,000. For me specifically, under like the $18,000 mark, and I can eat a 50% correction from here, even because I'm not over leveraged. I'm going to be adding to my position the whole way down, and I know the potential upside. I know the fundamentals of the technology, and I know where we can go and where we're highly probable to go from here. And that is a significant move up. That's tens of multiples higher in Bitcoin, and even more so in BNB and Ethereum. So I think that now is the time to be entering into these strong projects with strong fundamentals, not all in, right? DCA in, be responsible, keep your risk under control, and be a long-term holder, right? I have a very specific system when it comes to short-term trading that I've developed over many years. This is what I do: is develop systems, whether it's developing DeFi game theory and logic, or it's developing systems to take advantage of specific market dynamics in trading. But as I said earlier, the vast majority of short-term traders, especially short-term leverage traders, lose money. So I never suggest that anybody does short-term trading. I never suggest that anybody does leverage trading in the sense of utilizing leverage on these centralized exchanges. And what I suggest, not trading advice, but what I do, right? And what I suggest to my family and friends and family kind of thing, is that they get into projects and platforms with strong fundamentals, strong roadmaps, strong utility, and they become longer term holders. And that's what I'm doing, in the sense that I'm getting into Bitcoin, BNB, Ethereum as a long-term holder, dollar cost averaging. I can talk about the way that I don't like to say predicted, right? But because no one knows what's going to happen in the markets, in the sense that you're predicting kind of thing. But I saw that there was a high probability that 60K would be the next top, just based on the fact that when we look at trends in Bitcoin, all of the previous all-time highs were at least 3 times the previous all-time highs, and the previous all-time high before 60K was 20K. So to me, when I added significant capital to my long-term Bitcoin position at 4,000, it was with the vision that I would be taking profit at 60K. And you can go back and see posts in my Discord channel from 2018, 2019, 2020, saying that the next all-time high was likely going to be 60K. And I kept that position all the way up until we hit 60K, and then I started offloading it significantly. I always like to keep some percentage of my capital in the market and in these assets, because you never know. As I said previously, at least 3x. But of course, we saw much greater than that in the early days of the run-ups of Bitcoin. So I kept about 20% of my position in, and I liquidated almost all of the rest into stables. I used it to get into some DeFi projects. Some I had some pretty good strategies early on, automated strategies to get into DeFi projects in like 2020, 2021. Some of the major projects that are still around to this day, like Yearn Finance and AVAX, and these projects, getting into them as like one of the first 10 people to buy into them and hold them long term. So that's what I used a lot of my capital that I took out of Bitcoin to do, and also a lot of it just sat on the sidelines until right now. Effectively, the first time we cracked below 20K, I started buying up positions, and I bought one significant position around 19K. I loaded up again around 17,500, and now just a couple days ago, I took another rather large position, about $3 million worth of Bitcoin, BNB, and ETH, and I still have a lot of capital that I'm keeping on the sidelines, just because I want that dry powder if we do go lower. And if we go lower, great. I'm excited about that, because I have dry powder to take advantage of that. And if we don't go lower, I'm cool with that too, because I have a significant position, and I'll buy on the way up. I'll buy corrections on the way up. And dollar cost averaging is important for this reason, because you're never going to pick the absolute bottom and the absolute top. You may you may do it once, you may do it twice, but that's no trading strategy, right? That's getting lucky. So for day-to-day swing trading kind of thing, I'm someone that doesn't do this long-term, like chipping away DCA strategy. I'm more someone that does like 50% in, and then buy the other 50% if I get a opportunity. When I say 50% in, I'm not talking about 50% of my capital. I'm talking about 50% of my allowed risk exposure. So 50% in at my first signal to enter, and then potentially add to that one time, and then and then when it's my signal to exit, I'm just fully out. That's my short-term trading position. My long-term trading position, I'm looking at entering at about 20% of my risk exposure at a time. So ideally, I'm entering into a full position over about 5 entries until I have my full allowed risk exposure in a long-term position. And I'm not doing it like, say, Bitcoin hits 17,000, I'm entering, and then Bitcoin hits 16,900, I'm entering. I want to see significant moves and a significant reason for me to be entering at these additional prices. So that's just my overall look on the market. I think it's a good time to be entering. It's DCA in, manage your risk. And then to speak about our projects specifically, I'm not someone who buys my own projects, and there's just a very strong reason for this, and that is I know when we're going to be announcing partners. I know when we're going to be launching a new product. I know when I'm going to come on and do some kind of buyback or some kind of injection. And because I have this inside information, I decide not to do day-to-day trading of my projects. But I do, I do, I don't want to say that I never tell other people what to do with their money, but in my opinion, getting into strong projects like Animal Farm and like Drip, these projects that have utility, that have a track record, that have a roadmap, that have a strong development team, are absolutely the kind of DeFi projects that you want to get in when we're in these market conditions. And for Animal Farm, the way that I have my exposure to it, basically the way that I have my position in it, is through the founder staker contract. So essentially, the governance tokens, which are utilized to earn a percentage of all the profit generated from the platform, whether through taxes associated with the reward token, deposits, withdrawals, back-end lending to PancakeSwap. These governance tokens, I have a position in these governance tokens, which is a locked position, which means I can never sell these tokens on the market, and I can never add these tokens to the circulating supply. But they're locked in our governance staking contract, which allows me to earn a percentage of the profit generated from the platform. So this is how I have my exposure to Animal Farm, and I'm able to do this in Animal Farm and not in my other projects, because Animal Farm pays out its profit in the form of BNB and BUSD, which means I can collect my profit as a part owner of Animal Farm, just like everybody else who's staked in the governance contract, in the form of BUSD. So there's no selling of our native assets to realize this profit, and that's a beautiful thing, because it allows me to benefit like everybody else in the system. It really aligns incentives in a perfect way, but not in a way where I have any kind of advantage over anybody else, because I have this insider information and I'm using it to trade our assets. So this is one of the reasons why I love Animal Farm so much, because it allows me to benefit as a participant in a way that I'm not able to do in any of the other projects that I've developed. And the Animal Farm has one of the strongest fundamental utilities that you can have in all of finance. So I believe that Animal Farm is speaking directly to the issues that we see right now in the market with this centralized control, with the demand for lending, but as we see, all of these platforms which have blown up over the past couple months that are doing lending, which are clearly the highest demand platforms in DeFi, they blew up because they did it in a custodial, closed source, and centralized way. And when you have a custodial, closed source, centralized lending platform, it creates an environment that is ripe for misallocation and fraud, effectively, and not just in crypto, but in all of finance. And Animal Farm speaks to this demand, allows for yield to be generated through lending in a way that's fully open source, that's fully non-custodial, and that is completely decentralized. So not just decentralized in the way that some other projects are decentralized, in the sense that everybody's holding their own keys and everybody is calling their own functions in the contracts. We have that, right? But we're another level of decentralized in the sense that even the ownership of the platform, so where the fees that are traditionally going to developers and founders, even that has been decentralized in a way like no project have ever done, where the stakers of the governance token, who are the participants of the platform, are earning and making decisions as the owners of the platform. So we are meeting the current demand. We are solving the current issues in the market that we see that are just wrecking people every day, causing these this major volatility in the market. We're solving these issues, and at the same time doing it in a way that's completely innovative, that is that has this first mover advantage and this major community behind it. So I don't think there's a better project in the world right now, traditional finance or DeFi, that people can get involved in. And of course, you can get involved with that by either getting on and buying the governance token outright, or buying the reward token outright, or utilizing some capital that you have that you're just kind of sitting on, and adding it as collateral to our platform, to one of our farms or pools, and allowing it to be lent to PancakeSwap, where you're going to earn yield both in our reward token and BUSD. And then the reward token that you're earning yield in, you can decide to either utilize it to earn BNB in the platform, or utilize it to earn a governance asset in the platform, which is how you capture that BUSD that's being generated through lending, or do all three through the auto compounding reward contract. So it's the auto compounding contract that allows you to both earn BNB while compounding your position into the farm, which is allowing you to generate the governance asset. So it's called the auto dog pound. And I know I just kind of went off there, but I think some of the things I said were important to speak to, because it all ties together. So I probably answered a couple of your questions there, but I want to knock it out.
No, thank you, Forex Shark, and just such great wisdom. Thank you for sharing about not just